I'm sticking with the artificial intelligence theme here. I know I'm a little obsessed with the whole idea. I do think it's going to change the world, and this could be a good thing. On the other hand, who knows, it might not be. Perhaps it will go all Terminator on us and Skynet takes over. Anyway, it's not just reshaping how we interact with technology, it's fundamentally altering the physical infrastructure of our world. Today, we're diving into the $222 billion revolution happening beneath our feet.
Wow, $222 billion? That's an astronomical figure. How does this investment compare to other major technological shifts we've seen in the past?
Well, it's unprecedented in many ways. The closest comparison might be the build-out of the internet infrastructure in the late 90s and early 2000s, but even that pales in comparison to what we're seeing now. We're talking about a complete overhaul of everything from semiconductors to power grids.
So this isn't just about software updates and new apps. We're looking at a fundamental restructuring of our technological backbone.
Exactly. Let's break it down into 4 key areas undergoing massive transformation. First, we have what I call the digital bedrock of AI, the semiconductor industry. We're witnessing a revolution in chip design with entirely new architectures being developed specifically for AI workloads.
I've heard rumblings about this. How exactly do these new chips differ from traditional processors?
Well, traditional CPUs are designed for sequential processing, handling one task at a time very quickly. But AI workloads require massive parallel processing capabilities. This has led to the development of specialized AI accelerators and new memory architectures. To give you an idea of the scale, training a large language model today can require more computing power than was used to train all AI models in 2015 combined.
That's mind-boggling. So we're not just talking about increased demand for existing products, but the creation of entirely new categories of semiconductors.
Precisely, and it's not just affecting chip manufacturers. We're seeing impacts across the entire supply chain, from companies developing specialized AI chips to equipment manufacturers providing the tools to produce these components. It's a complete reinvention of an already cutting-edge industry.
So it sounds like a gold rush for the semiconductor industry. But surely this massive computational power needs somewhere to live, right? What about data centers?
That's our second key area, and it's crucial. The infrastructure requirements for AI go far beyond just chips. We're talking about massive, highly specialized data centers designed to handle unprecedented computational density. These aren't your run-of-the-mill server farms. They need specific architectural requirements for power delivery, cooling, and networking.
How specialized are we talking here? Can you give us a concrete example?
Sure, consider this. A single AI training cluster can consume as much power as a small neighborhood. We're talking about facilities that require their own power substations, advanced liquid cooling systems, and network architectures capable of moving petabytes of data in seconds. It's like building a small city dedicated entirely to computation.
Oh, that level of power consumption is staggering. It must be having a huge impact on our energy infrastructure, right?
You've hit on our third critical area. The energy demands of AI are reshaping our entire power grid. Projections suggest that AI data centers could consume 9% of US electricity by 2030, up from 4% today. That's more than double in less than a decade.
So how are power companies handling this increased demand? Are we looking at a massive build-out of new power plants?
It's not just about building more capacity. We're seeing a fundamental transformation of our energy infrastructure. Traditional power grids were designed for relatively predictable consumption patterns. AI workloads, on the other hand, can create sudden, massive demands for power. This is driving investment in grid modernization, energy storage systems, and advanced cooling technologies.
I never thought about the cooling aspect. I guess when you're dealing with that much computational power, heat becomes a major issue?
Absolutely. In fact, there's particular interest in companies developing innovative cooling solutions. When you're dealing with AI systems, cooling isn't just about comfort, it's about fundamental operational capability. We're seeing advancements in liquid cooling, immersion cooling, and even experiments with locating data centers in extreme environments like the Arctic to take advantage of natural cooling.
This is fascinating. It's like AI is forcing us to rethink every aspect of our technological infrastructure. But I'm curious, how is this affecting the competitive landscape? Are we looking at a future dominated by a handful of tech giants?
That's a great question, and it brings us to our fourth key area: market structure and competition dynamics. The conventional wisdom suggests that AI will be dominated by a handful of large tech companies, but the reality is more nuanced.
How so? It seems like the big players have such a head start in terms of resources and data.
They do have advantages, but history shows us that technological revolutions often create opportunities for new entrants. Think about the internet revolution. We saw waves of innovation, first in infrastructure, then in platforms and applications, and finally in mobile and cloud computing. Each wave created opportunities for new players, even as earlier winners consolidated their positions.
And you're seeing a similar pattern emerge in AI?
Exactly, yes. The largest tech companies are making massive investments in infrastructure, but this is creating opportunities for specialized players across the value chain. We're seeing companies emerge that focus on specialized AI accelerator chips, advanced cooling systems, software optimization tools for AI workloads, and novel approaches to energy efficiency in data centers. Okay, I want to take a quick break to tell you about Insight One, the investment education platform I've created. As many of you know, I've spent my career as a Wall Street analyst, and yes, I was fortunate enough to be ranked number one by Institutional Investor 10 times. But what really drives me is sharing this knowledge with investors like you. Insight One is where I brought together everything I've learned about markets and investing, combined with powerful technology to make it accessible and actionable. It's the same level of analysis I provided to major financial institutions throughout my career, now available right on your phone. And if you've been enjoying the insights from this podcast and want to deepen your investment knowledge, Insight One is the next step. You can find us on the App Store, on Google Play, or on our website, theinvestmentanalyst.com. And now let's get back to our discussion.
So there's still room for innovation and new players in this space. That's encouraging for entrepreneurs and investors alike.
Absolutely. In fact, I'd argue that the massive infrastructure build-out we're seeing is creating more opportunities, not fewer. It's opening up new niches and specialized markets that didn't exist before. We're seeing startups tackle everything from AI-specific networking protocols to specialized power management systems for high-density computing environments.
This is all fascinating, but I'm sure our listeners are wondering, what does this mean for investors? How can they position themselves to benefit from these trends?
Great question. I suggest thinking about AI infrastructure investment through a three-horizon framework. The first horizon is core infrastructure players, companies directly involved in building out the foundation of AI infrastructure. Think semiconductor manufacturers, data center operators, and major cloud providers.
These would be the more immediate direct plays on the AI build-out, right? But I imagine they might also be the most crowded trades.
You're right on both counts. They offer more immediate exposure, but they also come with higher valuations and greater market attention. The second horizon focuses on energy and resource players, companies positioned to benefit from the massive increase in power and resource requirements.
So we're talking about utilities with strong grid modernization programs, companies developing advanced cooling technologies, that sort of thing.
Precisely. And don't forget suppliers of critical materials like copper and specialized cooling fluids. The third horizon is what I call emerging technology players, companies developing next-generation solutions for AI infrastructure challenges. And
this sounds like it could be higher risk but potentially higher reward. Are we talking about early-stage startups here?
It's a mix. These might be startups working on novel chip architectures, but it could also include more established companies pivoting to address AI-specific challenges. Think about firms creating specialized software for infrastructure optimization or developing new approaches to energy efficiency in high-performance computing environments.
So how should investors balance their exposure across these horizons? It seems like a tricky balancing act.
I recommend focusing about 50 to 60% of your AI infrastructure allocation on core positions. Companies with proven expertise in critical infrastructure components. Look for strong balance sheets, established customer relationships, and clear technological leadership. For energy sector exposure, which might represent 25 to 30% of your allocation, prioritize companies with both current capabilities and clear modernization strategies.
And for those emerging players, the higher risk, higher potential return category,
consider allocating about 10 to 15% to this category. Look for companies with unique technological advantages and strong intellectual property positions. It's higher risk, but offers potential for significant returns if you can identify the right players.
Well, this has been an eye-opening discussion. As we wrap up, what's the key takeaway you want our listeners to remember?
The AI revolution isn't just about the visible applications, it's about the massive infrastructure transformation happening beneath the surface. The winners in this space will be the companies that can effectively build and manage the foundation that makes AI possible. It's a reminder that sometimes the biggest opportunities aren't in the spotlight, but in the systems and infrastructure that enable the headline-grabbing innovations.
That's a great point. It's a whole new world of innovation and investment opportunity that most people probably don't even realize exists.
Exactly. The next time you interact with an AI, remember the vast network of chips, data centers, and power grids that make it possible. It's a testament to human ingenuity and a preview of the technological challenges and opportunities that lie ahead. Keep exploring, keep questioning, and keep unlocking the potential of our rapidly changing world.
And on that note, we'll wrap up this episode of Unlocking the Upside. Join us next time as we continue to explore the stories and ideas shaping our future. Until then, keep your curiosity alive and your mind open to the possibilities all around us.